Hello everyone, this is Jay Soloff from Investors Alley, and this is our options trade of the week. We are here at Market Chameleon checking out the unusual options volume page, and there's a lot of action this week, so a lot of big volume in the options world. Sorting that by volume, we see several of the stocks that just released earnings: Apple, Facebook, Amazon, all up at the top, plus gold and silver. That pretty much describes the last week, the big tech names and precious metals. So looking at Apple, it did a crazy amount of volume, about 3 times what it normally does, over 2 million options, the vast majority of them on the call side, which is generally a bullish sign. So let's dig into that a little bit. We saw a 10% increase in the price. So Apple not only had killer earnings, but they also announced a 4-for-1 split. Splits tend to have a short-term bullish effect on the stock, so that could be another reason why we saw so much call action today. We'll take a look at it. So I'm going to go to the trades, and then I'm going to sort the trades by quantity. I think that's a good way to do it, and we can see where some of the higher quantity, some of the big trades that actually occurred. Try to get an idea if the flavor was definitely more bullish, because just because call trades, they don't necessarily have to be bullish. Generally speaking, though, when you see that much call action, it's people buying calls, which is bullish, or even if it's selling covered calls, that's at least moderately bullish. So this looks like selling puts, which would be considered bullish. A lot of December action here. Possibly some covered calls, which would be at least moderately bullish. This is definitely an opening trade here. That for this was one that expired today, where someone sold the 407.5, couple thousand of these puts, probably with the stock right above it, probably assuming it wasn't going to go back down because of the split. And this person did really well, probably made 100% of the premium on both of those trades. And these look like potentially some call spreads here. So someone might have been buying the 440s, selling the 450s. It could be rolling up a short call, like a covered call. It could straight up be a just a call spread, which would be certainly be bullish, and maybe assuming that Apple's got a fair amount of upside. Maybe not going to go all the way to 125 when it splits, but maybe it'll go from 100 to 110 or something like that. So that's definitely a lot of bullish action. So that seems to support that a lot of people were buying it based on the split and the good earnings. If we look at it, you can see obviously huge jump today, 10%, particularly for a huge, $2.5 trillion stock. 10% is a huge move. So we were looking at October. You can see these higher strikes probably going to be where a lot of the volume was today, and sure enough, and there's that 440, 450. Now this was done before this. It was done at about 410, and it already went up to 425. They probably could have already closed this trade out. Maybe buying here, selling here. Selling here. So you have a chance to make, even if you were to do it today, and it's you probably would want to move up your strikes at this point, or do something narrower. But this would cost about 340 with a payout of about 660, which is certainly not bad. But if you were to go higher or do a 5-wide strike, it would certainly be 5-wide spread. It would certainly be a little bit more cost efficient. But that's a sort of some way you could get upside exposure without spending a whole ton. Now keep in mind that this is all going to split, so whenever that happens, everything will be divided by a fourth, and shares will obviously be multiplied by 4 if you're holding the shares. So this sort of thing we talk about in my bi-weekly chat called Coffee and Condors. So if you want to learn more, check out coffeeandcondors.com.